Welcome to the Rapid Recap. I'm Sasha Evdokov, and it's March 5th, 2015. Now, today I want to talk about the 90% battle that you're going to do in the stock market, and also talk about some stocks in the current market conditions, what's going on and what's happening with those stocks. Now, before we get there, I do want to let you know that I do have the technical analysis course available for those of you that have been anxiously awaiting it. I know it was delayed by a week or two here, but I wanted to make it perfect and just right. And I did want to add in a bunch of different bonuses, which I'll show you here in a second what they're all about. But it's not fully available online, meaning you can't just find it on the website. So you have to go to a special link. But if you do want it, you can go ahead and get it already. I just don't have the promotional video on there yet and a couple of other little things. So with that in mind, what it looks like is something like this. And the way you get it or purchase it is if you have an account already, you would go to the members section and log in and go through there. And that page would actually look something like this. Now, members who have been with me for some time actually get a discount even more so than the pre-launch. So it's actually going to depend on your account, how long you've been with me, and just some other stuff that the tech guys put in there. So you do get a little bit of even additional discount from the main course discount. So right now, the disc sets are basically 14 main disc sets. And then you also get a few of these additional bonuses. And I'm just going to run through this quickly because I want to get to the rapid recap. So it'll be a 235-page book. It'll be a practice homework DVD, which is really related to the course. It's going to be another DVD and video about how I scan stocks and how I build a watch list. It's going to be a video for the 245 money-making stock chart setups for swing trading for the book. So it's basically discussing some of the charts in there and talking about the setup. So even if you don't have the book, it's going to be really helpful and viable just looking at more charts and technical analysis. And then also 30 free days to the critical charts. So it's basically a 10-hour course, just the course alone, plus another 3 to 4 hours of bonuses. And probably the price tag will be about $650 for once the pre-launch is done. So for those of you that know me, I don't really do promotions. I don't do sales pitches. That's just not the way that I operate. I just want to pack as much value as I can. But right now on this course, what we're doing for the promotion is $297, and that'll be including shipping, manufacturing, the works if you're a USA customer. And it's actually even less if you log into your account on the Rise to Learn website. This is for people who have a previous course, so it's even less than what it is here for those of you that have been with me for some time. Now, I do want to let you know it's going to take a week or two at least to deliver your videos, the physical copies, just because I have no clue how many people are going to purchase. And by me doing this, it kind of helps me assess how many people are going to get the videos as well, so we can order another batch. I assume that once the the promotional video is released, we'll probably get a bunch of orders. But if you want to get this course, then just go to this link right up here, rise to learn /lesson/ trading with technical analysis. So go to that link right there, and you can go ahead purchase it. And if you do have an account in the past, just go to members and then log in, and then you'll be able to purchase that course, which will have a big yellow button that isn't very good looking at the moment, but it will allow you to purchase that course even lower price. Now, as far as the insides, this is what it looks like. So the videos are basically 51 minutes here, 34 minutes here for that one, 43 minutes, 30 minutes, an hour and 4 minutes. So you can see that it's a pretty massive course. Then we have a bonus video for the practice homework. And this one just is really about looking at the technical analysis and what it's about. We have the 245 money-making stock chart setups, and then we have a how I scan stocks and build a watch list, which is also going to show you some things on screen there as well. So there's a lot of material on that course. So that's really what it's all about, and that's what the course looks like. So let me give you a rundown without all the video stuff. So looks like that, and that's pretty much all the videos in there. So 17 modules, 14 DVDs, 10 hours just for the course, plus another 3 hours for the bonus material. And if you wanted to get that, then the link to get it would be at this website address right here at the top, or just log into your account. And again, like I said, if you want the physical copies, just be patient, because it may be sold out pretty quickly, and it'll just probably take 2 to 3 weeks to get those in, but they will get there within a couple weeks. So once the promo video comes out, I'm sure there'll be probably more people that want the course, because it's a massive course and I put a lot of energy into it, because that was my goal, was to give you as much as possible for those of you that were hungry to learn in one series. And this is probably one of the more in-depth courses that I've ever created. We are working on one options course that's going to be probably twice the size of this, or I hope that'll be about twice the size of this, because I just want to pack it with some extreme value and just give you the best knowledge and information that I believe is out there in terms of learning in the stock market. So with this in mind, let's go and talk stocks. So let's just take a look at some of the market, what's going on, and what's happening. So with the market, basically over the last couple weeks or two, we've just been idling. We're isolating here a little bit, and there's not a lot of actions. However, that doesn't mean that there aren't stocks to trade or stocks to look at and stocks that you can create a healthy income from or profit and hold on and let them run. So let's go over some of the things that we talked about from last week, and then I'll share with you a few new picks and new stocks that caught my eye and radar this week. So one of the popular ones I noticed was Facebook, because it trades 27 million shares. Volume is picking up on this stock, and it tried to break through today with a little bit more than average volume. However, it didn't have enough juice. So the line that I mentioned actually on Twitter to watch was this, and you notice that it hit it right there and it rejected those prices. That means it's not ready. And I pretty much assumed it would do this, because looking at this right here on 226, 227, it rejected those prices. So when it came up to this swing point high, I assumed that it would reject as well, because it's not acting extremely strong. It may pick up and break through it soon, in which case, if it has the juice, if it has the volume, if it has the price action, if it has the wide price spread, if it has my pattern, then I will enter it long. But until that point, I'm sitting and waiting. So we're waiting for this line to break right here at about 82.17, 82.18. So that's Facebook. Next one, Netflix. Netflix has been a pretty good or solid run. However, now we have this little sell-off. The stop, if you're in it long and you've been in it from this region or this level, or even this region or this level, and hopefully you've been peeling some off into strength, your stop should be just slightly below this line right here, because if this stock breaks this line and it's accelerating some volume right now, you could see some serious trouble, because we do have this empty gap right over here in this region. So keep an eye on that gap, and just be careful and watch out. So if it breaks that line, you could see trouble. Again, of course, as it may bounce right here on this support level, the top and bottom of the gap, but if it breaks below that, then you really have some trouble. MCD we talked about not last week, I believe, but maybe the week before. And this one had this descending trend line moving. We had some heavy volume coming in and it broke, and it's holding up pretty well. So if you're still in it on this break or from this break, then just hold on to it. You can peel some shares off into strength and, you know, let it ride. I mean, just take it easy, enjoy the family, and go read a book, and that's all. Just hold on. If it breaks your stop, then, you know, you get out. Pretty simple concept. Cracker Barrel, same thing. We talked about this one last week. This was the highs over here previously. Broke those, nice heavy volume, continued for a second day follow through, which confirmed the move. The price spread was nice and wide. Okay, you can see the top of this bar to the bottom has a nice wide bar. When you see a nice wide bar, that shows a little bit of a conviction. It shows a little bit of a trust in the move. So, and as with the second day as well, that also makes things a little bit better or healthier. So now we're moving a little bit sideways, and this may take some time, and we consolidate. And then if things work out, we can continue higher. Or if they don't, it may come back here, bounce, and then go back higher. If it breaks this line, then I would definitely be out of the stock. So watch this line very closely. NSP, we talked about as well. This one, if you look at it on the weekly, it's a lot better. This has a massive run for the last couple weeks. So you can see this swing point high right over here, and then it broke right around this region. And afterwards, we had another little resistance line right there. So let's just zoom in like on a 2-3 day. Continued, broke again right here on heavy volume, and the stock continued. So if you got in it, whether it's on this earlier line at the 40s or you got in it at the 45s, that's a good, healthy $7-8 run. And, you know, just peel some off into strength and continue to ride it. Simple as that, right? Okay, Yum. We talked about Yum as well. Yum is doing pretty well. We had this run right here, consolidation pattern. Nice run from the $75 level all the way to about 82. You can see that stock pulling back just a little bit here. Here's the daily. So you can see it pulling back just a little bit right here. If it comes to this line and bounces, this would be the adding opportunity, and that's where I will add if the stock bounces on nice volume. However, if it breaks it, I will be out fully. All right, so next one, we have LL, Liquid Lumber Liquidators. So this one is an interesting pattern. If you look at the weekly, you can check out the ABCD pattern. So here's our A pattern, or if you want to get more precise, you can say here A to B, B to C, and now C to D. So you can see that ABCD pattern. As this evolves, you can see that this stock is moving heavy volume to the downside. And if you look at it on the daily, the ABCD pattern is much tougher to spot. So always look at your charts on multiple time frames. And now you can see this pattern evolving. Similar to lock. We talked about lock for months. I was talking about it since November, watching this pattern. It's such a clean line. And I had a lot of members on the critical charts that got in it right here on the break. And even though it's a slow mover, it was a very clean $2.50 run. And there's nothing wrong with that. If it works for you, fantastic. Then continue to run it. But the pattern, here it is. We got the A to B, B to C, and now the C to D. So you can kind of see that pattern right there evolving. So always look for those patterns if you can. By the way, here's another ABCD pattern that caught my radar. Here again on the weekly. So there it is. Can you spot the ABCD pattern? Boom. There it is, ABCD pattern. And this is basically crowd behavior. This is what happens as crowd behavior evolves and develops. Now you can look at things on the daily, which is a little bit more of a precise entry points. It gives you your entry points into the stock. But the weekly is more critical and more prominent. And if you have the same thing on the daily as you do on the weekly, more probabilities and more things are in your favor. The more things you have in your favor, the better your odds. That's what this business is about, probabilities. It's not that you have to trade a whole bunch. You just have to trade the right stocks at the right time and know those probabilities. Same thing with A and F right here. Here we go with the A to B, B to C, C to D. Take a look. If you entered this stock right here, let's see, playing with these new drawing tools right here on that break, as you can see, volume is starting to pick up. Okay, if you entered it right here, even if you entered it late right there, you still had a very solid run from $33 to $20. Who wouldn't want that? $13 gain in just 3 months for a very clean pattern. Okay, so yes, I know it moves slowly here, but why have no mental clarity? Why be stressed out during trading? You know, everybody's looking for those quick gains, when in fact, one of the most important things for me is the quality of life. Why do I need the stress of chasing after a $5 gain in a penny stock when I can just relax? I can chill out right here for just a month or two, couple months, 13-point gain to the short side. Makes it simple. Okay, ABCD pattern evolving right there. Okay, so there it is. All right, let's take a look at a couple other ones, maybe some new stocks. OREX, take a look on the daily. This one had a couple swing points here, so notice it came up here, it rejected it, came up here, rejected it. This time it broke out and it did it on heavy volume. So that was a key sign. If it can hold, it may see a few more dollars, but this is an $8 stock and it's a cheap stock. So sometimes these can be manipulated, so always be careful, but I figured I would throw it in there for those of you that you know, trade these stocks. Here's VEEV. Also, you can think of this as an A to B pattern, B to C, and now the C to D is breaking. So this is the weekly. It is just starting. It is just getting started. And you can see we have a little gap right here. And on the daily, that pattern is tough to spot. Take it out to the weekly. Pretty simple, pretty clean. Stock is moving lower. The volume over here is quite high, so the stock looks pretty good for shorter, for a short. Of course, watch that gap up there because they can get filled and then it can sell back off. Next one, TNET. Same concept, upward trending support line. These upward trending support lines, if they get broken with a gap and with heavy volume, that spells trouble. So we got a gap right here. We got wide price spread here. We got heavy volume here. We have a solid support right there. Now, that solid support right here, if it's broken, which it was, now it could spell trouble, in which case the stock can evolve a new pattern, something new can be created. New things get evolved from patterns when these patterns break, and it's a good thing in my opinion because it allows you new opportunities, it allows new chart patterns to form, and it allows you to get into stocks that you potentially missed. So embrace the pullbacks. PCYC, also another one that's good to look at the weekly. Take a look at this right here. Resistance line, broke through it, continued to move higher, consolidated for a little bit for a week there, broke through it, continued to power higher from the 178 to the 254. If you got in this stock, even if you got in it late, in 6 days, you'd make $70. 6 days. Okay, so here was the resistance line. I know not every play works out like this, but this was a good win for those of you that got in it, nibbled it. Here was the other little flag pattern as well. So this stock's just powering higher, but don't chase these stocks. It's just an example for you to learn from. Okay, let's do one or two more. Bio here, take a look. Weekly trend line starting to break. Volume right here starting to pick up. There's the break coming in. We see nice action from here, and the stock is creating higher lows. So notice this upward trend line starting to build. So there's a few things in my favor on this stock, and that's why, in my opinion, it looks pretty good. The only thing is, can it follow through and can it stay above this level? That's the key, and that's what we're watching, because it only trades about 400,000 shares, so it's not a heavily traded stock. Not to mention it's in the healthcare sector, so it could be a little rocky. So always be cautious, peel some into strength on these kinds of companies. INTL, International Associates. Here we go. Here's our resistance line. Pop. We have nice heavy volume right here. There's your entry point. Stock's moving, consolidated for a little bit. Here was our little consolidation pattern. There we go. Little consolidation pattern. And now we are breaking again. So for a $30 stock, the pattern still looks clean, looks healthy. Some of the key signs were actually right here. You can see some of the heavier volume spikes. You can see the increase here. So there's a lot of things that showed you what was happening. In addition, you have this descending trend line of volume as this stock was building this base right here. So a lot of good stuff there that was in your favor. And finally, last one. Let's just do this last one. This one has potential to go higher because if you look at the last one, we have similar concepts in play. So take a look. Here we have descending volume while we're consolidating right here. There's our consolidation pattern with descending volume. The up volume, or the bullish volume, we had a rise. Here was the rise. And now, as we're starting to push against this swing point high, we're pushing up on it. We had increase in volume coming in. The retracement was on lighter volume. So now what we want to see is about 500,000 shares come in. If we don't get that, it could reject these. So we want about 500,000 shares to come in, and then we may see it power higher. So that's kind of the goal of this one, but it looks like it could break out maybe tomorrow, maybe next week. If it doesn't and it rejects these prices, then there's no reason to chase it. All right, so now one lesson for today is the 90% rule that I want to discuss, and it's the 90% battle. A lot of times in the marketplace, you're going to be battling, and most of the battle that you're going to be doing is going to be with yourself. And that battle is going to go back and forth with, am I trading with the right technical indicators? Do I need a different indicator? Am I, entering too soon? Am I entering too late? Am I trading the right amount of shares? This battle that you're dealing with yourself is the majority of the game in the stock market. It's the majority of the things that you have to overcome. If you don't overcome the internal concepts, if you don't overcome the internal game of this business, then you'll never be successful, because the majority of the issues that people have is not the tools and the techniques. The tools, there's a lot of tools out there, and you can trade in so many different ways. You can trade just following the moving average. Even if you got into the moving average right here when it broke the moving average and was a little above it, okay, so you take a chance and then you got out right here because it's going under the moving average. So, you could have done a trade like this. But the battle and the issue would be something along the lines of, when the stock starts pulling back, like right here, start wondering, oh, is it going to come back? Am I going to have to sell my shares? Is it not going any higher? And what you got to remember is you got to relax. A lot of times when you start thinking like this is you're not thinking about the charts logically. You're thinking about the money. And so many people, they're focused on the monetary gain, and they're focused on making that next buck. And, I kind of laugh sometimes because I used to be that way too. I would chase the dollar here, chase the dollar there. And, hey, maybe I can get this stock, get that stock. And finally, when you surrender yourself to just focusing at the system, to focusing at looking at what's in front of you, which is the chart, focusing on the price, on the company, on the behavior. When you just take that fundamental concept and just do it the way it's supposed to be done, rather than fighting with yourself in your mental game, you'll be way more successful, 1,000 times more successful. That is when everything really comes together. It's when you start putting all the mental pieces together. And most people, they don't get it because they're fighting with the external things. They're fighting with this guy's his indicators aren't good, or this guy's analysis isn't good, or the stock picks that I chose were wrong, or this and that. So a lot of it is all external problems that really could be avoided, or they could be magnified. They can magnify your success. Imagine if you eliminated every single loss that you had because of your mental issues. If you got rid of your mental issues and the games that your brain plays while you're doing trading, imagine how much more successful you could be. And it's funny when you think about it this way, because you have to find something that really applies to you and works for you. For me, I love studying. I love reading. It keeps me distracted. It keeps me focused. I like creating and teaching content. Working with you guys, that for me actually allows me to sit on my hands. It allows me to not worry about the chart as much. When I enter the position, I let it sit. I let it cook. I let it cook like a crock pot, and it's there. And they continue running for days, for weeks, for months, and you let them go. Here's an example of a stock that's breaking out, breaking to the downside. Even if you nibble a little bit, you just sit, be patient. The weekly chart says that things are in my favor. It's just starting. A&F. Earlier, this was 3 months earlier, right here, if you just nibbled a few, just let it sit. Just let it sit, and then go enjoy your life and let it ride. And people want to be the day traders. People want to chase the stocks, and people, they want to make the quick bucks. But the reality is that takes more focus. That takes more energy. It takes a lot more commitment. And for me, I don't want to be more strained when I'm trading. I would rather be more relaxed. I would rather be more enjoying my time with my family. I would rather go out and just do something fun. Now, I do some day trading from time to time, but that's because the opportunities are there. That's because the setups are there. But I don't chase the stocks, and I don't chase the trades just to trade. And I don't chase the trade just to make a few quick dollars. When you're comfortable in your life, and when you're happy, when you're doing well, all of these things just start to work together. And then you're more relaxed to go ahead and just focus on the charts. And then when you focus on the charts, you'll be making more successful trades. And then you'll be making more money. When you make more money, you'll have more relaxation. That way you also trade better. So it's a whole loop cycle that continues over and over again. But it's the mental game that most people lose in this business. It's the mental game that people struggle with. And that's what you really need to work on if you haven't worked on it already with yourself. So go out, try and be uncomfortable from time to time. Do things that maybe you are uncomfortable about, whether that's talking to someone you don't like and try and make them a friend. Be nice to them. Whether that's, doing things that you normally don't do. Go out, try it to see how it is that your mindset, your mentality reacts to situations. All right, thanks for joining me, and I hope this video was insightful. If you did want to take a look at the Trading with Technical Analysis course, just go to this website address right here at the top, or log in your members panel, and you should see that course available there. And you can go ahead and just read through the material right here and see exactly what each DVD has. Now, to be fully transparent, I would say that the material in terms of content is probably about 40 to 50% similar to the green course. So if you do have the green course, then the material is somewhat similar. But we do go way more in depth in this course than we did in the green course, and we tackled things in greater detail, and there's a lot more examples. I would say if I had to give an analogy for it, the green course is more for people that are looking to dip their toe in the water and looking to just kind of get started with trading. They're more new or don't have the right foundation in terms of my standards of having a good foundation. And then this course is pretty much if you're fully serious, if you maybe just have the yellow course, understanding the stock market, but you're really dedicated, you know you want this, you know you want to learn, then this course is really for the highly motivated educators or learners, because it is a lot of material and a lot of content. There's a lot of study material that's involved. It's not just 1 or 2 hours. It's basically 16, 17 hours. So even if you just sat and watched it straight through, it would still take you at least probably 2 days of just watching the material. So in either case, I just wanted to let you know if you had any other courses that this one is somewhat similar to the green course. It just goes way more in depth in terms of technical analysis. We get deeper into a lot of the subjects, and there's a lot of examples for pretty much everything that we cover on the chart. So that's really what makes it a lot longer, a lot bigger, and a lot more intense. So with that in mind, thanks for joining me. I hope you enjoyed the recap this week. Make it a great week ahead of you, and just, spend some time with some family. Enjoy doing the things that you're doing, because life is short. Thanks again, and I'll see you next time.